Okay, let's start the presentation. Thank you everybody for the coming down, and thank you RHB for giving me an opportunity to speak here. So first of all, I'd like to ask a question. So who here consider themselves more of a trader? Hands up. And who here consider themselves more of an investor? Okay, so I think I'm speaking more to investors. So there's the first part that will speak just briefly about trading, and the second part more investing. Okay, so let's begin. Firstly, I need a disclaimer because it's part of compliance. So the opinions expressed is part of my own and do not reflect the view of RHB Securities. But later I'll talk about some research points. And next, so this is me. I'm a graduate from NUS and I've been dealing and trading as a remisier for 6 years, servicing quite a lot of clients. So what do I do like as a remisier is that I like opportunities of stocks that are actually quite undervalued, which I'll talk about later, and also price momentum. So firstly, I'll just go briefly about the price momentum. So the opportunities in Singapore's securities market and small caps, which is actually a lot of focus on by RHB research. So let's just go to this simple point that the government brought up. So the government is going for high growth enterprises with customized support and very good CAGR and things that will pursue growth and a clear growth state. This by the government recently in the Straits Times and IE Singapore. So as an investor nowadays, you want to know whether your company will last through disruption, because disruption takes away a lot of technology and a lot of business from a lot of stocks as well. So the GDP average from 6.87% from 1975 to 2017. This is for the Singapore growth rate. And the long-term historical average for STI composite stocks for the last 20 years is about 6.9%. You got to factor in dividends as well. So equities as an asset class, as everyone know here, it offers the best returns over the last 3 decades. And even more when dividends are reinvested. Yeah, so, okay, so what strategies work from my experiences? Firstly, I like, for trading, I like price momentum strategies, which means that a very big long or a very big short. So a good price momentum will look like an early strong percentage move outwards through price move outwards and with sideways volumes, and a short on the upward trending stocks that have moved and maybe stagnated in a price with lower lows and lower highs. So I'll give an example. So to me, this setup previously was a very good short. This is OKH Global. So this is one of my experiences that I traded. So I waited for this for a very long time because I knew that they were very debt-laden company. They couldn't do anything much with their business. And sooner or later, the fall come. So when you short it, you intraday, you can cover it around 4:30 because do not cover it during day close. You can make actually a 41% day intraday short. So that was my experiences. And on 16 March, it was a very red market. Yeah, and then a good price momentum for me was like a Hock Lian Sing. So it's a very stable company with, in my opinion, very good dividends and very good ownership structure. So these are some things that you, as a chartist, right, you get very excited when you see it because there's always a fundamental angle behind it, and also the momentum will show you like the volume is coming and it's in one direction. Yep. So this is price momentum along. So it was 38 cents on strong breakout, strong volume, full green candlestick bar. Then I sell on 51 cents. I mean, it's somewhere on the near, not to the top, but somewhere there, but maybe a bit lower. But to me, this is like a trade. It's just trading. Yeah. So this counter pays pretty good dividends, by the way. It just recently paid a 20% dividend. Yeah. So let's move on to the investing part, which everyone here is, I think, an expert and like looking forward to. So for me, personally, I like low price to book values. Below 1 works well for me. Low debt or no debt, or at least less than 50% of the assets. And if debt is present, you must have like concrete assets like prime properties. That means I do not want to see like properties of maybe inventories that can't really be counted, but something that is concrete and people love it. Because that actually helps a lot in crisis. When you have a prime property, people actually lend you money during crisis, like in 2008, all the property developers, all the casinos, they still got through. So, and you need to have a strong fundamental angle. So what do we look out for in stocks? As an investor, I think you need to have strong moats or business brands like everyone, like, Warren Buffett always talk about. Strong financials, low debt, and strong compounded annual growth above the industry average. This is what I look out for. So I like to firstly bring about about China. So nowadays, everybody is very excited about China. It's not really because China used to be a factory place. Nowadays, China is growing. The middle class is growing richer, and the poorer are trying to reach the middle class. So you have actually a lot of consumers that consume goods. So in this area, actually a lot of businesses go and set up in China to sell and to develop long-term relationships. So to me, I was looking at China and I was like, I want some exposure there. So the number of domestic tourists grew by 2.8% to 276 million, while overseas tourists grew by 1.1 to 8 million in 2015. And this is like the breakdown of the top 20 destinations of China. So Shanghai is number 2, Hong Kong is number 1, they consider it China, and then number 3 is Beijing. So when I was looking at it, and I was like, okay, I need to look for some exposure that is great in business in China, and came about the first point at RHB Research. They came out with a research which is very interesting. So by the looks of this picture, can anyone guess what is this building? Anyone seen it before? Don't worry, just be open. There's no right or wrong. Okay, so this is Westin Shanghai. So the first research that came out by RHB Research, which really excited me, was Bund Center Investments. So this is one of the small caps that, for example, RHB Research usually gives out, and really very good content. So I was looking at it, and I look at the SGX stock facts, and I look at the debt. First thing I look at the debt. Every company I look at, I always look at the debt. Because assets you can come a fake, but debt you cannot fake. So it owed 0.3 million, and the total assets was 480 million. So that debt to me, right, when I do just a debt over asset ratio, you get about 0.6%. So I was hooked onto it really. So when I read the report from RHB Research, I was quite excited. So the Westin Bund Center, this is in Shanghai, by the way. So Bund Center Investments is 80 cents. The market cap is about 614 million. So the crown jewels are like a 570 million 5-star hotel. This company paid $153 million in dividends over the last 3 years. So you know that a company that pays good dividends and do solid business with low debt, that is like a winner, a recipe as a winner. And especially in volatile times when people are very afraid of disruption, you really want to have something that is concrete-based assets, low debt, and consistently make money for you. So it generates revenue and cash flow of 70 million per annum from rental income and hotel earnings. So the ratio is like 479 million assets and net cash about 62 million. So to me, wow, it's like a gem. So this highlight of what the RHB Research gives us when they give us daily and we prep our clients. Okay, so why do I get so excited about just a property counter? So other than the net property income yield that's measured against asset value range of 6-10%, and there's higher than asset yield of 3 or 4% in investment properties and hotels at historical costs, there's also a very conservative accounting policy that reflects the deep value of its assets. So currently the property assets are valued at 407 million because this is before the market, and versus independent appraisals of 2 billion. So just by buying the company, right, you're actually owning the part of properties that could be revalued, and this could actually trigger price increase. But stability-wise, the business is doing very well. So with the current stock price of 80 cents, it represents a steep discount of 70% to its true RNAV, which is revised net asset value. This is come by the analysts and the appraisers from the property. So to me, that the China's economic growth rate of 6% shows the growth in China's market. And I think that tourism will always pick up in China because China is becoming more and more like your place to sell to, more than just the place to build your stuff. So with the TP of 104, I mean, that's a suggesting outside of 24%. I think it's quite likely. I like this company quite a lot. So these are some examples of a strong fundamental angle, very low debt, very good earnings, pays dividends, and is from RHB Research. So I like it a lot. When I saw it, I was very excited. I was like, oh, wow, Something like, one day when you read something and you get very excited, that is like the kind of feeling. Yeah. Sometimes when you read reports, right, it can be very boring because it's like regurgitation or, yeah, some people do. Okay, so the next one I look at is a Singapore-based counter as well. So this is Amara Holdings. So this one, the debt is on the high side. Maybe 300 million debt, 725 million assets, 42%. So I asked myself this question. Where are the assets? Where are the assets located in? So I was looking, I saw Amara Singapore, Amara Sanctuary, Amara Bangkok, and then the new upcoming thing. So I was like, okay, this is pretty good. This research that came out, okay, I like it, because the story fits coherently to me. So the market cap is 324 million. Yes, Amara Signature Shanghai coming, which is a 343-room hotel, retail mall, and office building. So portfolio consists of 388-room Amara Singapore, 140-room Amara Sanctuary, and 250-room Amara Bangkok. So the total assets about 725 million, debt 300 million, cash about 16 million. To me, all these are pretty good properties, and you know that in Singapore, you having a hotel is quite a good property anyway. Yeah, so I see the prospect of this company. So what RHB Research angle, which is very good, was it has a signature Shanghai commencing operation in third quarter 2017, which is coming soon. So there's a 58,000 square foot development, 80% for hotel and 12% for retail and 8% for office. So they expect significant contribution to earnings in 2018. So this is how the building looks in Shanghai. So factoring the RNAV share of 140, Amara is trading at a price to RNAV of 0.35 times. So RHB Research believes that it might trigger re-rating of 0.65 the price of RNAV and a significant earning contributions from Amara Signature Hotel. So these are such examples of companies that when you're looking at the stock market, even despite the volatility and slowdown, there's always some gems to uncover. So that's why you always want to keep a lookout and look out for RHB Research as well. Yeah, they have pretty good stuff. Yeah. So when I look at the SGX stock facts, all of you usually they're very well known with all this. You will look through and then you find out that hey, they've been paying dividends every year. So these are such companies that to me are very good. Firstly, you pay dividends. Secondly, the ownership. If a lot of the company is owned by a few individuals, you know that there's ownership in the company. You don't know that no one likes to sabotage themselves, right? So this is something very good. Yeah. So Q&A, just a very simple one. For us, RHB, we have research, very good research. We have good trading angles, and we just open up to Q&A. Yep. Any questions? Okay, how about any investors' concerns in this current market condition? Any questions? Okay, yeah. Okay, by the way, we're having really good things today. So if you open up with us, we actually have a commission rebate. You can look at us for the booth, and there's a new technology that can allow you to trade everywhere in the world. So and it's free. So it's only for today. So please do look at us for the booth. It's actually regarding to the data. Thank you, everybody.